The good news overall for, I guess, look at our market and the economy is that overall household wealth, which is a combination of home equities and any other investments people have, is actually at or above what was the peak in 2005. So what does that mean? Well, for homeownership, that means that homeowners are feeling more confident, their equities are up. Not that home values are necessarily at or exceeding the peak levels of 2005 and 6, although actually in many markets they've actually hit that area, that level. But what we're seeing is consumer confidence. If their equity, they've been paying down mortgages for the last 10 years, so their equities are actually up and stock values are up as well. So we're seeing more confidence, and that is leading to a release of that pent-up inventory that we've been waiting for. When the economy started to recover, we had this wave, a rush of buyers coming into the marketplace, and then we were waiting for the sellers to follow, and it really took a while for them to do that, and the release of inventory has been relatively slow. We've seen it in the upper end, the over $500,000 market, and whatever is sort of defined as upper end in any given market. You see that inventory being released because, as we said before, that was really the market that recovered first. So, and we're hoping that that starts to trickle down, and I think it will. But it's taking some time. So, and that trickle-down effect is important because right now in the lower-priced market ranges, the first-time home buyer, traditional first-time home buyer price ranges, we're just not seeing enough inventory to satisfy demand. And what really takes is for those people who live in those homes currently now, for them to do their traditional move up to the next home, to the larger home. And that just hasn't been happening in a fast enough pace. And actually, it's not projected to happen at a much faster pace, even for the next this year, 2 years or more, mainly because there's not enough new homes being built. Household formations are up. Household formations are smaller, which means that they'll need more homes. And we think that that's going to put pressure on housing, put pressure on that move-up buyer. It's not likely that there'll be a lot of new construction built for first-time home buyers, but what we want to see is the new construction expand for the move-up market, and when that happens, that releases the inventory for first-time home buyers. We are seeing sort of a mini trend. It isn't a big one, but it is something different and unusual. And that we're seeing, since first-time home buyers have been accumulating wealth through the downturn, there have been many who didn't lose their jobs, weren't in financial stress, but they still held off on making a move, either getting married or creating a family or whatever the reasons. They held off on their home buying decisions, and now they're just starting to do that. And what we're seeing is that many of those buyers are actually sort of skipping that first-time home buyer, moving right up to the second home market, that sort of traditional four-bedroom colonial suburban home. And that's helping relieve some of that inventory that might be building in that price range. But in general, if you're looking across Detroit area, we're seeing economically good news. We're seeing auto is building as many cars as they can, mainly trucks and SUVs, but the demand is strong in the marketplace. We're seeing technology move into Southeast Michigan with Google and with Chrysler and with Ford looking at autonomous cars. And we're seeing some good high-paying jobs, quality jobs, at least selfishly for housing, good news for people that move into the market and more likely to buy a home as opposed to rent. So we're seeing some really good activity throughout Southeast Michigan. For the Wayne, Oklahoma, and Livingston and St. Clair markets, the value trends are following just what we've seen for the last 6 or 8 months. The under 250 market is still very wild, still crazy. Inventories are skinny and inventories are continuing to decline. The 250 to 500 range inventories are rising, but so are sales, and we're seeing that a balanced market in the over $500,000 market, or whatever might be the upper end in any market that you're in, that's still very strong, relatively speaking, but getting more balanced. And in fact, as we said before, values have declined a little bit in the marketplace because inventories are rising faster than sales. But overall, still very good in that marketplace.